What's up guys, welcome back to another video and thank you for being here. In the last weekly analysis video, we predicted that the market will fall down and retrace to the 0.5 of this range right here. And as you can see, it didn't really happen. And the reason for that is because on the weekly, we kind of are stuck in a consolidation range, as you see here. So if I draw this range right here and I draw another range on top of that from the 0.5 to the top here, just to split them into quarters, so the first half into 2 quarters, and the same thing on the bottom here, you will see that every time we approach the lower quarter or the top quarter, we reject from it or we find support from it, and we bounce back, and we keep doing kind of like a consolidation on a higher time frame, which is the weekly. So something like that is really horrible, because yes, we do kind of see that the market might go down, but at the end of the day, the market might go up and shoot up. We don't have a clear direction, to be honest. On the top here, the candle closed on the 0 level, or the 0.5 of the bigger range. What I assume is going to happen is that as long as we're in consolidation range, what I suggest to do is don't try to force when we're gonna break out of this consolidation range. Instead, try to play alongside with the consolidation, especially we're consolidating on a bigger time frame like the weekly and the daily. So what I suggest you to do is, once we get down on the lower quarter of this range, take a buy from low and sell at the high, and just simply continue following this strategy until one day we wake up and we see that we moved from this range. Now we can talk about more price action, but for the time being, we're kind of stuck in this consolidation range, and we don't know when are we going to break out of this consolidation range. So what I suggest is, instead of predicting when we're going to break out, whether it's up or down, it's to play within the consolidation range. So when we are in a premium in the top quarter, you'll be expecting a sell, and when we are on the lower quarter, you'll be expecting a buy position. And we can go to the 5 minutes and we can try to see if that's actually making sense or not. So if I just zoom out right here, so as you can see, we're on the bottom, the lower quarter of that box, right? And it's a big range because we're getting it from a weekly chart, so of course it's going to be a big range. All of this range is about 1,758 points, so this is a really big range, but it is what it is. And what you want to do when we are in the top quarter, you'll be expecting a sell. When we're on the bottom quarter, you will be expecting a buy, and I'll show you and demonstrate for you how you can do that. So I'm on the 5 minutes here, a little bit of a bigger time frame, but it is what it is. So right here, we went down to that 0.5, which is the lower quarter of this range. The lower quarter of the range will be expecting a buy. So to expect a buy, I want to see a bullish price action. All of this price action is indicating lower and bearish trend. I just changed the text to white so you guys can see here. And starting from 9:30 a.m. New York time, this is where the market opened on that day, and you see we're above that lower quarter of that range, and we already dipped down, we made correction, and we're coming up. And when we are here in this area, I'm expecting a higher prices. I'm expecting the price to go a little bit high. So as you can see here, we have a fair value gap on the 5 minutes chart right here, and it's gonna be this one right here. And as you can see, we didn't really like it, kind of failed here, and that's because of one thing only. Like, I don't know, man, like ever since Trump got in office, the market been acting weird, and it's not delivering efficiently, but it's fine. That's no issue. This is where, or we can also put a 0.5 retracement here from the high to the low, and as you can see, the price gave a retracement to discount and then it shot up. You could have taken a trade on when we entered here, and stop loss would be under this low, which is really big, but you will be looking to target like higher, really high prices. So if you want to just for the fun of it, would be like that, it would be something like a swing trade, and maybe like getting that void, filling that void. And as you can see, the price did fill the void eventually, and it's 1 to 4, but we don't really trade swings on the future market because it's really expensive and nobody offers that on the prop firms. So you would be looking for like inversion fair value gaps, which would be your best bet. And as you can see, once we got in the 0.5, you would be looking into bullish price actions, which you can see we got it here, and we came down, we came up back up again to kind of invalidate the short ideas, and we got this price action here. Your stop loss would be below the inversion fair value gap, and you would be targeting this high right here again. This is kind of a little bit late in the session, but as I said, price action has been horrible lately. I don't know why, but it is what it is. But I'm pretty sure on a lower time frame, I'm pretty sure that right here, that instant reaction down and then up, I'm pretty sure that's a good IFVG or inversion fair value gap strategy or model that appeared right here, and it already after 10 a.m., which is really good in the silver bullet timing. So that and getting the London high, it would work. But I mean, if you're just waiting on a bigger swing, something like that, getting a better discount price, that would be a swing trade, like maybe you're trading forex or something. That would be a really good play. But again, guys, the next day right here, we're in the lower part or the lower quarter of that area, and as you can see on the 5-minute time frame, another inversion here, and we just like shoot up to fill that gap right here. And you won't be targeting all of this, you'll just be targeting maybe to London high, or this high right here, which is 140 points, but you would be risking or having a stop loss of 80 bucks or probably below here, 54 bucks. That's a really good trade. But yeah, as you can see, we're in the lower quarter, we're expecting longs, but whenever we're in the middle here, where that 0.5 of the very big range, I wish I could have changed that to a different color, but this is the 0.5 of the whole range, which is the consolidation line. So you shouldn't be trading in here. If the price is here, you're just trading the outside to inside or inside to outside. Which I mean by that is when we're in the top quarter, you're trading to the 0.5 of the whole range, and where you're the lower quarter, you're trading to the middle of the range, of that big range, which is the 0.5. So again, guys, on the top here, yes, we didn't really touch it, but it's not really a touching liquidity or anything. It's just a zone. So you'll be expecting a short from here, and as you can see, it started melting down. Once we kind of market structure shifted here on the top from the low to the high, we gave retracement to the 0.5, and then we started lowering the price down with this inversion right here. We broke it and we continue lower, and where did we go? We retraced it to the 0.5 of the whole range, of the big range right here. It just shot down, and then we opened lower on Sunday, and we were on the lower quarter of that range, and we almost got the first target that I talked about in the previous weekly analysis video. Because the market is consolidating, we decided to move higher again and not go lower anymore. So when the New York session opened right here, we manipulated down, and then we came back to that lower quarter of that range, and then we shot up like right away. You'll be targeting the 0.5 of the whole range, your stop loss would be lower here. It is a horrible RR, but this is how the price action has been lately. It's been horrible, but it is what it is. I just trying to give you the bigger picture of where we are right now. And as you can see, yesterday when we approached the top quarter of that range, what did we do? What did we do? We just straight up shot down to the 0.5 of the big range. So again, guys, that's how the market has been lately. Has been horrible, honestly, just because we're in a consolidation range on a bigger time frame. I hope this video makes sense. I hope you understand where we are on a bigger time frame. So please play safe. Make sure to have those levels on your chart. So the lower quarter of that range is 21,125, and the higher range where you should be expecting shorts ideas is 21,992. And yeah, guys, that's it for higher time frame analysis. Those targets are still up to grab, but I don't know where the market is gonna break out of this consolidation to. Maybe we're gonna break out to the upside or downside. If we're going to the downside, those are the valid targets that I'm looking to take out. Not any lower than that, by the way. And if we're breaking out to the top, that would be a new all-time highs for Nasdaq, and I don't know where we should be headed because we don't have any liquidity to target or anything except that one right here. So yeah, that's it for today's video, guys. If you find this video helpful, please make sure to leave a like on the video and subscribe to my channel if you are not already yet. And stay tuned because there's a giveaway video coming out soon. Thank you so much for watching. I'll see you in the next one. Peace.